Okay, if you're a landlord here in the UK, listen up. There's a new rule that could easily cost you thousands, and you might not even see it coming. Today, we're going to unpack these new energy efficiency regulations. But more importantly, we're going to expose the hidden tax traps that can turn a simple property upgrade into a massive financial headache.
And to help us get this right, we're working from an essential guide put together by the chartered tax experts over at My Tax Accountant. They've really laid out exactly what you need to know to stay on the right side of the law and, crucially, protect your bottom line.
So let's start with a number that should grab your attention: £15,000. Yep, that's the potential cost for each of your properties just to meet the new Energy Performance Certificate rules. It's a huge figure for sure, but believe me, that is not the whole story.
Because here's the bit that really matters, and it's what most landlords are completely missing. The real danger isn't just that upfront cost. No, the real trap is buried deep in your tax return, and it's all about how HMRC decides to classify that spending. If you get it wrong, you could be out thousands more.
So here's our game plan for today. First up, we'll look at the sheer scale of this challenge. We're calling it the Compliance Mountain. Then we'll dive right into that hidden tax trap. We'll get super clear on the crucial difference between a repair and an improvement. We'll look at your funding toolkit, and we'll wrap it all up with a simple action plan. Right, let's get into it. First section, the Compliance Mountain. This is all about the journey every single landlord is now on to get their properties up to that all-important EPC rating of C. And you really need to pay attention to this timeline. As it stands, the minimum is band E, but look what's coming. From 2028, any new tenancy you sign has to be for a C-rated property. Then by 2030, that rule applies to all tenancies, new or existing. The clock is well and truly ticking, and there's no getting around this.
So just how big of a deal is this? Well, according to the latest ONS data, a staggering 59% of all private rental properties are currently below that target C rating. We're talking about nearly 3 million properties that need some serious work. This isn't some minor issue affecting a few landlords. This is a massive challenge for the majority of us.
And that brings us right to the heart of the issue: the hidden tax trap. We're about to see exactly why an $8,000 upgrade could end up costing you a whole lot more once the tax man gets his say. Stay with me because this part is crucial.
Okay, this is the absolute key distinction you have to get your head around. On one side, you've got a deductible repair. Think of this as simple maintenance. You can deduct the cost from your rental income in the same year, which means you get immediate tax relief. Simple. But on the other side is a capital improvement. That's an upgrade. And here's the trap. You cannot deduct this cost from your rental income now. You only get any tax relief on it way down the line, when you eventually sell the property.
Let's look at a real-world example to see how this plays out. Imagine a landlord in London with £25,000 in rent coming in. They spend £8,000 on new windows. Now, if HMRC sees this as a repair, their taxable profit drops to £17,000. But if it's classed as an improvement, their taxable profit stays at £25,000. The difference? An extra £3,200 in tax they have to pay right now in a single year, just because of how that spending was classified. That's the trap, right there in black and white.
And don't just take my word for it. As tax specialist Heather Powell from Blick Rothenberg points out, for landlords who are in it for the long haul and aren't planning to sell anytime soon, this capital gains relief is basically a null relief. It's a promise of a future benefit that does absolutely nothing to help your cash flow today.
So, the big question is, how do you avoid falling into this trap? Well, this next section is your secret weapon. We are going to arm you with the knowledge to correctly classify your spending using HMRC's own rules. Getting this right can literally save you a fortune.
First up, let's get really clear on what a repair is. The keyword here is restores. You're just putting something back to its original condition. The classic example is replacing like for like. So if an old wooden window frame is rotted away and you replace it with a new wooden one, that's a repair. Easy.
Now, let's talk improvement. The keywords to remember here are enhances or upgrades. You are actively making the asset better than it was before. For instance, if you rip out all the windows in the house to significantly boost thermal efficiency rather than just fixing a few broken panes, HMRC is very likely to see that as an improvement.
And here is a fantastic pro tip that really shows how these rules can change over time. You see, years ago, if you replaced old single-glazed windows with new double glazing, that was considered an improvement. But now, double glazing is just the modern standard. So HMRC now classes that as a repair. It's just the modern equivalent. Knowing these little nuances is absolutely critical.
Okay, so we get the challenge and we understand the tax trap. But here's the good news. You don't have to face all these costs by yourself. Let's open up the funding toolkit and see what grants and reliefs are available for the 2025 to 2026 tax year.
The big headline number is this one, £7,500. That is the grant you can get towards installing an air or ground source heat pump through the boiler upgrade scheme. That kind of money can make switching to low-carbon heating a much more realistic option.
All right, here are the main schemes you need to know about. There's the ECO4 scheme for those big whole house retrofits. The Great British Insulation Scheme, or GBIS, is perfect for single jobs like loft or cavity wall insulation. We've just mentioned the boiler upgrade scheme for heat pumps. And finally, the Home Upgrade Grant, or UG2, is for homes that aren't on the gas grid. Each one has its own specific rules, of course, so you'll need to check if you're eligible.
Now, here's where so many people go wrong. They put it off. This timeline shows you that the window of opportunity is definitely closing. Both ECO4 and GBIS are scheduled to end in March 2026. The boiler upgrade scheme runs a bit longer, but the funding is divvied up each year. The message here could not be clearer. You need to act now if you want to secure this support. So, we've covered the problem, the tax trap, and the help that's out there. Now, let's bring it all together into a simple, clear action plan, so you can move forward and tackle this with confidence.
Here it is, your 4-step plan. Step 1. Assess. Get a fresh EPC survey done. You have to know where you're starting from. Step 2. Budget. Get quotes for the work and, crucially, start classifying those costs into repairs and improvements. Step 3. Explore. Look into those grant schemes we talked about and see what you're eligible for. And finally, the most important step of all, plan. Create a tax-efficient strategy before you spend a single penny. A little bit of planning up front will save you a world of pain later on.
Now, of course, I have to say that the information we've discussed today is for general guidance only. It is definitely not a substitute for professional advice. Tax rules are complicated and your situation is unique, so you absolutely must consult an expert before making any financial decisions.
And for that expert guidance, you can get in touch with the team at My Tax Accountant. They can help you build that tax-efficient strategy and navigate all these new rules with total confidence. You can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk.
And finally, if you found this guide useful, please do subscribe to the channel for more essential updates just like this for UK landlords. We're here to help you stay ahead of the curve in the ever-changing world of property. Thanks so much for watching.